Okay, on the 26th of September, before October 10th and before the mayhem started, I made a prediction for when the crypto correction would end. And what I said is, the crypto correction will end when most people believe that the bull market's over. When Bitcoin hits between 95 and 98, ETH hits 3,200 and Solana hits $145. Now, this was before the October 10th mess and all the mass liquidations. And what looks like it happened is, if you look at the numbers, Bitcoin actually did hit the 98,870 level. ETH went slightly below my target to about 3,050 on a wick. And Solana clipped the $145 level. And now I've come out and said that I think that this market has bottomed about 2 months later. And if the market has bottomed, then I think what's going to happen is you've got a very short amount of time to get into risk on mode before the market actually starts running. And you can kind of see it when you look at the numbers. If you look at the numbers, the market's running and it's running very fast. I mean, this is what happened today, but if you look at what happened on today plus Friday, you've got some of the big names going up 70, 80, 50, 90 and 100%. So you have a very short period of time if you want to get risk on. And we're going to talk about how to get risk on and why I think the bottom is basically in. We also need to talk about the government shutdown, because the government shutdown finally seems to be over, or very, very, very close to be over. And we need to talk about what this means and how the government shutdown will affect the markets, because it looks like the government shutdown is going to affect the markets quite positively. If you look at Bitcoin's flying. If you look at the NASDAQ, if you look at the NQ, the futures, the NQ futures are up 1.44%. And so it looks like the end of the government shutdown is a really bullish thing for markets. So we are going to spend some time actually talking about that. So really, really, really bullish show today. Really, really, really big show today. Maybe one of the most bullish shows we've done in a long time. Let's get the show on the road, guys. Okay, and now I don't have ears anymore because I got into my ears. Anyway, guys, bullish show today. And you know what? It will be biblical if the market has actually turned, because what are the probabilities of calling it 2 months before the event and before the mayhem and being this accurate, if we indeed actually did call it this accurate? And I really did think that the bottom's in now, and that this prediction was as accurate as we're going to get, and we're going to discuss the prediction. So guys, if you are new to the channel, welcome. We've covered an amazing time, because I think we're in for either what is the last part of the crypto bull market or what is the next leg up in the crypto bull market. That's also one of the things that we will be discussing today. If you're new to the channel, please subscribe to the channel. If you are already a subscriber, I see there's over 1,200 people already here. I need you guys to just smash the like button. Let's see if we can get the ratio of likes to concurrent viewers like as close as possible. So let's talk about the prediction and why I think that we've actually bottomed now. And remember, this was not a willy-nilly prediction, because the prediction was made long before any of the market mayhem actually started happening. In fact, Bitcoin was trading at about 115,000. And that's when I said, guys, this correction is only going to end when people think the bull market's over. And you increasingly saw people talking about the end of the bull market. You increasingly saw crypto Twitter becoming more and more bearish. More people declaring that the bull market is over. More people thinking it's the end. I even had a debate with Fefe on the weekend. I'm not sure how many of you actually caught that debate around whether or not the bull market is over. And when I made the price predictions, I didn't think that my price predictions and my bottom indicators would line up exactly as they did. So my price predictions were 95 to 98 for Bitcoin. And as you can see, it depends where you look, because the charts are a little bit different on different exchanges. But here you got to like 98,500 basically on this exchange. For ETH, my target was 3,200. You can see that we got to about probably about 3,500, but we wicked to 3,100 or 3,065. And then for Sol, my target was 145, and we literally wicked into the $145 level. And then we bounced, and we bounced just after my bottom indicators. Remember, I made the show last week where I spoke about my bottom indicators, and I said most the indicators have basically checked. And you don't need every single indicator to check, but there are quite important ones that needed to check in order for us to have bottomed. The chart structure, in other words, the liquid, basically, did we wick down and then come out and take out the lows? We pretty much did. Was the average drawdown the same as a normal average drawdown in a correction? Yes. The one important one for me was the fear and greed index. this one, I needed the market to be in extreme fear for 4 or 5 days in a row to indicate that we're in a bottom. And we actually finally did hit that. We got like 4 days in a row on extreme fear. There are a couple that didn't trigger. And as I said to you before, it's not that every indicator needs to trigger for us to get to a bottom. You just need more indicators to trigger and more obvious indicators to trigger than not trigger before you can actually call the fact that there actually is a bottom. And we got that. We got most of the indicators triggering. The important ones for me were market sentiment, fear and greed, people really believing that we are in the end of the bull market. And all of those actually triggered, right? And I mean, I think the one which I know a lot of us are laughing about, but the one that was really important for me was this James Wynn indicator. And not it's nothing around specifically James Wynn, but it's a cohort of negative retail emotional investors that trade with their emotions before they trade with what the market's actually doing. They start trading with their emotions. And so when the James Wynn indicator, when he went short and he was gloating about the fact that Bitcoin's going now to 80,000, that is when I knew that, listen, it's time to actually go down. And I said it before, I said, you don't really need to catch the bottom every single time. You just need to, because the bottoming is a process, and you just need to be much more long than short when the market actually bottoms. And then you'll always have a chance to top up on your longs, which is exactly what I'm going to talk about today. I'm going to show you exactly what sectors you probably should be topping out on, right? Also, I mean, like, look, I don't know if James, I know he's a real person because we've interviewed him, but I don't really know whether James Wynn is trading with real money or whether he's going long and short on two different accounts and not sharing his accounts, because there's no way that a guy can just take a loss after a loss after a loss after a loss and still actually be in the market and still actually be in the market. It's absolutely crazy. And so I think he's probably trading on other accounts opposite of what he's saying, and he's only publicizing the one side of the trade. I mean, stupidly enough, he's always publicizing the one side of the trade that actually loses. But anyway, he's reflective of sentiment, and he's reflective specifically around the emotional trader retail sentiment, which actually always gets wiped. And so now we're in a position where I tweeted on Friday when the market actually started running. I don't know if you guys remember or if you guys saw what happened on Friday when the market started running, but it was crazy. I mean, the numbers were up, things were up 50%, 70%, 90%, 80%. And what I did was I tweeted a couple of things. The first thing I tweeted, I said, look, we've bottomed. Why did I say that we've bottomed? Because number one, the majority of my bottom indicators had hit, including the price predictions that I made, including the sentiment predictions that I've made, etc., etc. Number two is that usually when markets bottom, there's a or crypto market specifically, there's a massive short squeeze. Now, the psychology behind that massive short squeeze is quite easy, right? You're looking for a period of extreme fear or extreme negativity in the market for a sustained long period of time before you basically declare a market bottom, right? And when I saw 4 or 5 days of extreme fear in a row, that was my cue that at some point, these people are actually going to go short. And when they go short, those shorts are going to get liquidated. And that's exactly what happened on the weekend. So on Friday, we saw a massive short squeeze. Now, there were lots of theories about what the short squeeze was. One of the theories was that one of the exchanges that actually liquidated all their traders on the 10th of October is going through some kind of audit or is worried about going through some kind of audit. And so what they're doing is they're buying back all the positions that they should have on their balance sheet. Now, that could be the case. That could be the case. I have a hunch as to which exchange that could actually also be. And tomorrow or the next day, I'll share it if the information is valid, right? If the information is valid. Because I think that there is merit in saying there are certain exchanges who trade against their users. Now, when I say trade against their users, you deposit Bitcoin, ETH, Sol, whatever. They liquidate that into dollars. They put the dollars into their pocket because they're so confident that they're going to liquidate you. And so they're not actually holding all the tokens like they should be holding. And then if they need to get audited at some point, and the auditor says, hold on a second, like you're supposed to have 10,000 ETH. You don't have 10,000 ETH. Then these exchanges now need to get the 10,000 ETH, which is quite a big thing. So there is that theory. I'm working on confirming it. I'm very close to either confirming yes or no. I reckon in the next 2-3 days, I'll be able to confirm whether that theory is a real theory. Regardless though, all big bull market corrections end with a short squeeze. And on Friday, what you saw was exactly that. How many of you, let me know in the chat, but it's not Binance. Binance would be much bigger, and Binance do actually have a proof of reserve. Let me know in the chat if you guys were watching the Friday short squeeze, and whether you got caught up in it. In other words, whether you landed up buying a whole lot of the shorts. But what happened was we got this 2017 style price prediction. I don't know how many of you were here in 2017. But if you were here in 2017, Friday night was the first night in crypto that I've had in a long time, where I was reminded of the real price moves that we got in 2017. Things going up 50, 60, 70, 80% in a day. Shorts getting more and more squeezed. And now today we're trading quite green, and we're trading above 105,000 or 106,000 on Bitcoin, which kind of says to me, look, it's probably the fact that this correction is over. The bounce was in a biblical place. When I say a biblical place, it was the weekly. I don't know if you saw, but we started making a run for the weekly, and that run closed over Ben Cowen's invalidation level. Remember, Ben Cowen's invalidation level for this bull run on a weekly is above this 50-week SMA. And if you look at the 50-week SMA, the 50-week SMA is at around 106,000 or 105,000, and we actually closed around that 50-week SMA, right? And so now you have a position where we didn't close below the 50-week SMA. The bottom indicators have been triggered, and it looks like we're going up for another rally. Now the question is the following. Is this rally what Fefe says, and Fefe could be right here, is this the rally that takes us up to the level that is not a higher high? So in other words, is this a rally which takes us to this level over here, and we don't break a higher high, we get somewhere to 123, 124, 125, and then the bear market actually continues, and we've actually seen the end of the bull market. So most people believe that there's going to be a rally now. The only thing is around consensus of what this rally actually represents. Option number one is the Fefe option. The Fefe option is we go up, we don't beat the all-time high, and then we correct again and we go down to he gave us levels of like 3.5 trillion on total market cap or something like that, which is like a big way down from here. I'll show you what that looks like on the actual chart so that you can actually see. So what Fefe's theory is that we're going to go up, and this is total market cap, we're going to go up to somewhere below this level over here, and then we're going to go all the way back down to like $2.5 trillion. So we're going to go from there, we're going to have a real correction, which actually takes us down 50% on total market cap. Now, that would mean Bitcoin goes down, but the alts go down much more. The second theory is the Ben Cowen theory. And the Ben Cowen theory is exactly what Ben Cowen actually said, right? He said that we would have one last hurrah before the end of the bull market. I don't know if you guys were here, but let's take a listen. You say even if the cycle's not over, you're saying there could be one last hurrah before the end of the cycle. But you still think that, I mean, you're talking about Q4. There's 9 weeks left in Q4. There's 9 weeks left in this year. Like that's where we're at. So you're saying like best case scenario, there's 9 weeks left of this bull market, and that would be like one big move up. Worst case scenario, we close under the 100 or 103 or whatever that number is, or lands up being, and that's the end of the bull market.
Correct. Yeah, I mean, look, if you look at 2017, which there's a lot of similarities between this cycle and 2017. One of the ways to look at that is if you look at the number of days since Bitcoin had a 50% drop. You see how like last cycle there was a lot of volatility where we had frequent 50% drops, and then 3 cycles ago, there was a lot of 50% drops. But this cycle, we haven't had 50% drops. It looks a lot like the 2017 cycle, right? Where there was also really low volatility. So I think there's reason to look at this through the lens of what happened in 2017. And one of the things to note, maybe about some other coins, not just Bitcoin, but Ethereum, Ethereum was also kind of doing the exact same thing in 2017 that it's doing now. It was going sideways. It was not moving it was hanging out just above its bull market support band, and it stayed there until mid-November, right? Like it stayed there until mid-November,
Yes.
and it still got one final rally, and then the bear market ensued.
So Fefe's thing is one final rally that doesn't take out the all-time high. Ben's theory is we do have one final rally and it does take out the all-time high. And what that rally does is it triggers all the bull market indicators that indicate it's the end of the bull market. So retail basically comes in, the altcoin open interest over the Bitcoin over interest goes up, etc., etc. That is the Ben Kahn theory. The third theory is the Raoul theory. And the Raoul theory is a very simple theory. He says, look, this is a perpetual cycle that just goes on and on and on for another maybe 2 years. And I want to actually look at all those scenarios in terms of why the rally is happening and what the consequences of the rally actually are. Because what you want to try and do here, because you've got three scenarios, is you kind of want to marry the fundamentals to technicals and see which one gives you the better fundamental outcome. So let's talk a little bit about, first of all, why this rally could be happening. One of the theories as to why this is happening is the government shutdown, because we've got the government shutdown, which is potentially ending or should be ending very close. Specifically, if you look at poly markets, you can see that there's a 93% chance that the government shutdown ends by the 15th of November. Then there's a 99% chance that the government shutdown ends by the 30th of November. So we pretty much know that by the 15th of November, the government shutdown should actually be over. And so we finally got Trump speaking yesterday. He said, I mean, you can listen yourself.
Well, it looks like we're getting very close to the shutdown. We'll never agree to give any substantial money or any money to really prisoners, illegals that come into our country. And I think the Democrats understand that. And it looks like we're getting close to the shutdown ending. You'll know very soon. Thank you.
So it looks like the government shutdown is ending. They did take a vote. And in that vote, there was I think a 60-40 or 60-40 to invoke closure on a motion to proceed to legislate to reopen the government. It feels like a whole bunch of Democrats have basically deflected, and they have enough to actually. So what 𝗙𝗵𝗆 said, the Senate could vote as soon as tonight to reconsider the House being passed, which is done. The final package will replace the CR with a new one. With a 3-bill minibus, without at a time agreement, this could take several days. Most Senate Democrats expected to oppose the deal, but the outcome is is ultimately inevitable through any senator. Though any senator could delay the opening process. And now they're talking about the government shutdown potentially opening as soon as Wednesday this week. The government's been adjourned for now. And what they're going to do is they're going to be open today at 11 EST. So now it's 9:45 EST. At 11 EST today, they're going to be voting again, and potentially we're going to get the government opening. Either way, the government reopening is very, 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 very imminent. And what we know is that when the government reopens, the first orders of business have a big effect on treasury, on liquidity in the markets. And we know that liquidity is actually driving these markets. What do I mean by that? Well, the first order of business is the Treasury General account, right? So we've been following this TGA account, which is the government's, let's call it, second spending account. And what you can see is that they've refilled this account too much. They were aiming to get it to 850 billion. They got it to like 957 billion. They're probably going to start spending out of this TGA account and put $150 billion back into the market. So that's the first, pretty much the first order of business. Now, what we know is that when the Treasury General account starts to be depleted, or when the money from the Treasury General account starts to get spent, that liquidity goes up and actually pumps up the Bitcoin price. That would probably be the first order, the first order of business. The second thing that we know about is we know data is going to start coming out. And what is the data that's going to start coming out? Well, you're going to get inflation data. There's an inflation reading, which is, let's see if they've actually put the date in here. So November 13th, which is in 3 days, we're supposed to get an inflation reading. I wonder if we're actually going to get this inflation reading, because the government's not going to be open yet. So not sure if we actually going to get this inflation reading. But when the government shutdown opens, the data is going to start coming in. What are we expecting from the data? We're expecting inflation data to come out. I'm personally expecting quite a high inflation. The market's forecasting 3%. I think the inflation data may be slightly higher because of tariff inflation. Then we're getting unemployment data. There's a lot of unemployment data that might actually come out. And that unemployment data that might actually come out may reflect a lot of these AI unemployment, et cetera, et cetera. And so they may have to start, if the inflation can be held down, then they may have to start cutting rates. And so from that point, we look to Powell, and we look to see what Powell's next move will be when, now that the government shutdown is going to end, he has to make a move before the next, which is on the 10th of December. So he's got another month to make a move. They're talking about 65% or 2/3 percent chance, 2/3 majority voting for rate cuts, and 1/3 no rate cuts. I think we will get rate cuts in December, because I think the government shutdown is pretty much over, and we'll start actually getting the numbers. The other thing that's happening is that the SOFR overnight spreads have plummeted, and that means that the rates for the banks to borrow money overnight, so in other words, to get more liquidity, have actually plummeted, which makes taking those loans out much more attractive. So government shutdown ends, we get more liquidity. Then we also have this announcement by Trump, which, I mean, it's not a sure thing at all, but he's talking about another stimulus check. And it's a pretty serious stimulus check if it happens. Now, you remember that when Powell put tariffs, when Trump put tariffs out in the market, he said that some of that tariff money can be used to actually give dividends or stimulus to the US public. And so he posted this on Truth Social on yesterday. He said, "People that are against tariffs are fools. We are now the richest, most respected country in the world with almost no inflation and a record stock market price. 401ks are the highest ever. We are taking on trillions of dollars and will soon begin paying down our enormous debt of $37 trillion. Record investment in the US, plants and factories going up all over the place. A dividend of at least $2,000 per person, not including high-income people, will be paid to everyone." So if you read between the lines there, what Trump is talking about is he's talking about a stimulus. And it's not a small stimulus. He's talking about $2,000 per person, not including high-income people. What does that actually mean in actual numbers? Well, he says, currently there are 220 million adults who are fit for these income criteria. Top 15% of people would be excluded. That means that it's a $440 billion stimulus, under the assumption, because he says in his Truth Social post, at least. Okay? And so on the worst case scenario, you're talking about a stimulus check of $440 billion. Okay, now what does that mean in terms of numbers? So if you compare the stimulus numbers to, for example, the COVID stimulus numbers, the original two COVID stimulus numbers combined were $440 million. This one is $440 million. So this is like the equivalent of the 2020 or the 2021 stimulus checks that actually came out during COVID. Now, you remember what these checks actually did to the market, right? These stimulus checks are what drove markets absolutely crazy. And why? Because if you're not expecting money and all of a sudden you've got money, all of a sudden you get money, well, chances are you put that money to work, because it's like bonus money. It's like spending money. You either buy that amazing gift that you wanted to buy, or you buy that new laptop or whatever else, or you invest it and try and make money. Now, most people will invest it and try and make money. Why? Because they remember what happened to the last stimulus checks. So what is this? First of all, is this stimulus actually going to happen? Chances are very, very, very low that it's actually going to happen. In fact, what Polymarkets is predicting right now is that there is a 14% chance that the stimulus is actually going to happen. So let's not get too excited right now. Let's not get too excited and think that, oh, the stimulus is a sure thing. It's definitely not a sure thing. And if you were to ask me, I don't think the stimulus is actually going to happen. However, let's look at the bright side. What if it actually does happen, right? Why is Trump actually doing this, right? The reason why Trump is doing this is because the Supreme Court has to rule as to whether the Trump stimulus, the Trump tariffs were actually legal. The market is saying that there's only a 25% chance that the Supreme Court will rule in Trump's favor. And so what is Trump trying to do? It's a strategic move by Trump so he says the Supreme Court could very well rule that the Trump tariffs are illegal. By offering a payment to the general public, Trump is trying to pressure the court that if they rule against him, he can blame them for the people losing $2,000. So this is a very, very, very calculated move by Trump. Why? Because Trump's basically going, look, let me tell the people that they're going to get a stimulus, a $2,000 check. Then the Supreme Court rules against me. I have to refund all the stimulus money. I can then say, look, it was the Supreme Court that ruled against me. And now the pressure is on the judges of the Supreme Court to actually get this stimulus confirmed, right? So this is I think, more of a PR move by Trump. I don't think the stimulus is actually going to happen. I wish it does, because I know what happens if the stimulus actually does happen. But this is a very, very, very calculated move by Trump. The same way he kept saying, I've got Powell's replacement and, putting pressure on Powell. He's doing it here, but he's doing it in a very smart way. He's telling the American people, look, you're all going to get $2,000. And I actually think he means it. But then if the Supreme Court rules against him, he's like, look, I wanted to give you $2,000, but actually I can't give you $2,000 because the Supreme Court basically ruled against my tariffs. A lot of judges are questioning whether, number one, whether this thing is actually legal. And that's what the Supreme Court has to come out with, to actually decide whether the Trump tariffs were actually legal. Under the assumption that the Trump tariffs were not legal, now what? How do you pay it all back? Like, what do you pay the customer? Do you go like the customer that paid an extra 20% at Walmart for his tomatoes because they had a surcharge on the tomato? What does the customer have to go and put an application in? How do you give the stimulus the tariffs back to the thing? You can't. There's no mechanism to do it. So there are a lot of articles and a lot of views as to what actually happens, right? As some justices say, how would this work? It seems unlikely. It seems to me like this could be a mess. This is from a Justice Amy Coney Barrett, who says, those businesses representing a small group of small business plaintiffs, the businesses along with a dozen democratic-led states have challenged the duties. So no one actually knows how this would actually be replaced. And so now what Trump is doing, he's saying, look, like, you're trying to basically unscramble an egg. If you're trying to reverse tariffs, you're literally trying to unscramble an egg. You're like trying to go back in time, but the egg is so badly scrambled already and on 5 different plates. How do you unscramble that egg? And that's basically, I think, what Trump's angling at, and stuff like that. So that is where the stimulus comes from. Again, I mean, I love this from Thread Guy, where he says, like, there isn't a single human on earth receiving a $2,000 check from Trump that isn't going to immediately gamble all of it. I mean, I don't think that's true, but great. I do believe in the spirit of stimulus, and I really hope that it does happen. And there is a chance that it does happen, but as Polymarket has been pretty accurate, the chance that we will get the stimulus are about 15%, call it that. All right, so that is the Trump stimulus. So now let's talk about, remember we said earlier on that there's 3 options. One is the Fefe option, and we'll call the Fefe option the option of we go up, we don't get a higher high, and then we go down again and we get a real crash. Then you got the Ben Cowen option, we go up, we break the higher high, but then we come down. And then you got the Raoul Pall option, which is the bull market continues for another long period of time. Let's talk a little bit about the third one, because we've spoken about the first 2. The third one is plausible, but you also have to zoom out and kind of realize where this economy is actually at. So we have massive, massive job losses. A lot of them are AI related, but a lot of them are actually economy related. On top of the job losses, we also have high inflation at the moment. The Fed is starting to reduce rates. What is that going to do? Well, on the one hand, it is going to get more people into work, right? But on the other hand, it's going to drive inflation up again. Trump is calling and going to try and nominate or put in a very, very, very dovish Fed chair into the Fed to replace Jerome Powell in May next year. And the question is, what will happen when this person comes in and the market starts worrying about inflation again? So where do I put myself when it comes to the bull market right now? And I could change my view at any point in time with different data. But right now, as I look at the market, where do I put my view? My view is we're getting another run up. My view is more in the Ben Cowen camp that we're going to have a run up, which actually does take us above a higher high. And then my view is that the market later on next year gets a little bit spooked with the inflation numbers. And remember what happened the last time that the markets had inflation numbers. It looked something like this. So this is when inflation started to look very high and the inflation data actually started coming out. That is that period over there. You know, when we actually started like going up there. So that's the part that I'm worried about. I'm worried that, I mean, great. Right now, I think everyone is kind of united, or not everyone except James Wynn is kind of united that we're going to get a bounce. Then the only question is, how big is this bounce going to be? Well, I say we go above the all-time high. Fefe says we don't. We don't. And I think that's where we have to do it. So what does this mean for you? By the way, just there was another thing which came out on the weekend, which was Trump talking about introducing a 50-year mortgage. So up until now in the US, the maximum mortgage on a home is a 30-year mortgage. Now, Trump has amazing intentions here. What he's trying to do is he's trying to make housing more affordable for people. So because interest rates aren't coming down, then what he's saying, okay, cool. If interest rates aren't going to come down and housing isn't going to become more affordable, because he ran an affordability campaign, then what else can I do? Well, if you can't reduce interest rates as quickly as you want, what you can do is you can make the mortgage period much longer. So instead of taking a 30-year mortgage, you'll take a 40-year mortgage or a 50-year mortgage. Only thing is that when you take a 50-year mortgage, the amount of interest in a 50-year, just have a look at this. Like if you take a 50-year mortgage on a house of $500,000, you'll end up paying double that just in interest over the 50 years. But it does reduce your payment slightly, right? It does actually reduce your payment slightly. So on a 400K mortgage, it's 7% interest, which is currently what the mortgage interest rate is. On a 30-year mortgage, you're paying 558. On a 50-year mortgage, you're paying 1.1 million. So you will end up paying more interest, but it will actually make the payment slightly lower. Okay, so what does this mean? So I think everyone's united, or most people are united, that we're going on to risk on. And for me, what risk on actually means is, look, I'm still in multi-cycle tokens. I'm still not playing like bad, highly risky multi-cycle tokens. In fact, I've narrowed it down to 4 narratives that I'm actually playing. And tomorrow when we do a show, I'll actually break down the 4 narratives that I'm investing in for this part of the market cycle, right? I think you can kind of see it in the bubbles. Like the one narrative is definitely privacy. Just look at the bubbles when it comes to privacy. Starknet, ZK-Sync. Tomorrow I'm also going to bring you another little. I've got a very good one, but yeah, that very good one is going to go into front runners first. So tomorrow I'll bring you another privacy play. But one of the sectors is privacy. There's 3 other sectors that I would be playing this year if I actually, if I wanted to go more risk on. The other thing that that I do, sorry, let me just I want to call this up for you guys. So the other thing that I do as well when I go more risk on is I start switching spot Bitcoin into MicroStrategy, because I know that what happens is MicroStrategy is a leverage bet on Bitcoin. Now, if you look at what MicroStrategy has been doing, so if you look at MSTR, you can see that the MicroStrategy share price has gone down like to $212. So if you look at like where MicroStrategy is from its all-time high in the beginning of the year, it's down about 57%. Now, Bitcoin is not down as much as MicroStrategy is down. So one of the things that I do is I switch some of my spot Bitcoin into MicroStrategy, and that's exactly what I'm going to be doing now. I'm going to start going into slightly more risk on mode. At no point am I going into riskier tokens. I'm only holding multi-cycle plays. Why? Because there is still a chance that the crypto bull market is over, and I don't want to get caught out on that. So that's what I think. I think it's like if you stick again, you got to have a thesis. My thesis was that we've bottomed. If we haven't bottomed, we're very, very, very close to the bottom. And if we have bottomed or close to the bottom, then you want to go back onto risk on mode. But you don't want to go into stupid risk on mode, because if we haven't bottomed, you don't want to get caught out in bad tokens. And so get onto your multi-cycle tokens, hold those tokens now, and let's wait and see which way this market actually goes. Tomorrow we'll talk about which sectors are actually the best to invest in. I do want to say though, which is probably a good time if you are going to go risk on mode, is front runners. So it's been tough on the markets, but the calls that we've had in front runners in the private Discord group, the guys here have landed up making quite a bit of money. Like you saw, we got into StarkNet here. You can see everyone, this trader. So this is already when the traders started to print. I'll go quite transparently into all the calls that we've actually made here in the last couple of weeks. So ZK-Sync was one of our biggest calls. We called it much earlier than 44 cents. We called it about 31 cents. We called Zora, which I think is a very, very, very good one. We called Zcash. We called Print. Print, I think, is one of the best. Print, the amount of development that this token is having. Now, I don't generally talk about tokens with tiny market caps, but this token has a market cap of $3.2 million, which is like nothing. And when you look at what they're building, even if they just deliver like, I don't know, a tenth of what they say that they will deliver, and this team does actually deliver, they're building something absolutely amazing. And you go read the updates. The updates are like incredible. So that was another one that we called. ZK-Sync, obviously we caught ZK-Sync. We caught StarkNet. You can see there's our entry at 12 cents today. That one is trading at 20 cents. It was as high as 21 cents. So like in this market, to be getting this many calls, and you can kind of see it's one after the next after the next. So Near Protocol, we've taken a position in Near Protocol. We took a position in 𝗬𝗡𝗵 at $5.90. You can see our entry point. Here, where's our entry point? We had an entry point at $5.90 on 𝗬𝗡𝗵, and that one started printing over the weekend. Yeah, so lots of stuff. Also tonight, the Frontrunners crew are invited to a session with Vlad from Robinhood. If you guys want to join Frontrunners, guys, there is a link here. Crew are invited to. There's a link here. Guys, join. And if you don't like it, leave after the first month, and you'll get your money back. Also, we're going to set up our Pi-Nex bots. Now, our Pi-Nex account is remember, we started off with 50K. This is even after liquidation. We've got 150,000 in the account. The bots are actually printing. So we'll start actually doing a lot of these bots again, because they landed up being a great preserver of capital, and they're still landing up making a lot of money. If you want to join, sign up here. You can get up to $1,000 sign up bonus, or I think it's even higher. I think it's like $10,000. And there's a video here as to how to sign up and basically how to claim it. Otherwise, I will see you guys again tomorrow. Tomorrow, I think, if nothing else changes, we'll talk about the 4 narratives that I think we should be investing in. So I'll see you again tomorrow. Until then, trade well, my friends.